Hi, good morning, everyone. My name is Gerald, and today I'm going to share Singapore market opportunities, focusing on names that are positioned for Singapore's market revitalization. Welcome once again to the morning cuppa at 8, and I will start with introduction about what the Singapore market has done over the past 1 week. We have seen a recovery in the Singapore market. We are now once again close to the all-time highs. Above the 4,200 mark for the benchmark Straits Times Index. What has garnered a lot of investor interest would be this Equity Markets Review Group's recommendations, including a 5 billion equity market development program fund to strengthen the local fund management ecosystem. So what has been announced would be a 1.1 billion allocation to three fund managers to invest in the Singapore stock market, and a lot of the focus has been the small and mid-cap companies, where these fund managers will largely focus on. So we have seen not only the benchmark Straits Times Index hitting all-time high, but the mid-cap index has done well as well. We see here that it is close to the 52-week high as well. So some stats here to share with everyone. Since May, both the FTSE ST Mid Cap and Small Cap Index and comparable non-index stocks have seen higher trading activity as well as net institutional inflows. Over 80% of the nearly 120 non-index names have recorded increased trading activity, and close to 120 non-index mid and small cap stocks have also attracted over 100 million in net insti inflows since May. Some of the names that have attracted a lot of insti inflows would be, say, for example, UOB here, which is a stockbroker, with about 23 million of net insti inflows, and saw its price to earnings ratio increase from 7 times to 8 times. Another oil and gas company, CSE Global, had about 16 million of net insti inflows and PE increasing from 11 times to 16 times. So this is the full list of the stocks that have seen insti inflows. I mentioned UOB here and CSE Global earlier. But we actually see names across different sectors, including oil and gas with Rex International, industrials with Grand Venture, Q&M, as well as OKP. We also have healthcare names like Q&M Dental within the list as well. So today I'm going to share a bit more about three additional names that have actually seen renewed investor interest as a result of this program. The first is iFast, SGX ticker AIY. It is a Singapore-based fintech company that operates digital wealth management platforms in Asia as well as the UK. So the business include retail platforms like FSM1 and Bond Supermart, where they provide fintech solutions for financial institutions, digital banking services, as well as pension administration. So it is seen to benefit from the structural shift towards digital wealth management, as well as the increasing adoption of fintech by both retail and insti clients. We see that being reflected in iFast earnings as well. In the first half of the year, the revenue increased by 24% year on year, and net profit grew by 35% year on year. So this is the share price chart that we see for iFast, having a very strong bounce in July, with the strong first half results that they announced, and recently having a bit of pullback after one of the large shareholders sold down some of their shares. So just as a recap of the iFast fintech ecosystem, more than 1 million customer accounts, more than 800 B2B partners, and more than 14,000 wealth advisors, operating in 5 markets, including Singapore, Hong Kong, Malaysia, China, as well as the UK. So there's a breakdown of the geographical as well as product exposure. Singapore remains the key market for them, representing about 70% of the AUA. And we see here that the bulk of the AUA is in unit trusts. So we see also an increase in the group AUA in that that has increased 21.6% year on year to 27.2 billion as at 30th of June 2025. This was driven by a net inflow of about 2.2 billion in the first half of this year alone, reaching a record high. So we see here over the past few years that iFAST has seen consistent growth in terms of its net profit from about 11.6 million in 2022 to 41 million in the first half of 2025. Okay, the next theme I wanted to share about is Sheng Siong, which is seen as a more defensive play on Singapore's consumer sector. It has about 70 supermarkets across the island. And once again, we see the consistent growth in Sheng Siong's net profit as well, increasing about 3% in the first half of the year compared to the previous year. So we see here Sheng Siong share price also having the bounce since May this year to now about $2.06 per share. So in the first half of the year, revenue grew by 7.1%, net profit grew by 3.4%. That is really driven by the increase in the store count to now at about 86 store count across Singapore as well as in China. So in Singapore, the store count hit 80 in the first half of the year. We see the consistent growth from about 40 stores in 2015 to 80 stores in the first half of 2025, and that is helping to drive the revenue growth. Okay, so with that, we see the consistent growth in the revenue for Sheng Siong over the past few years. And given the improvement in the gross profit margin, the overall gross profit as well as net profit of the group has continued to increase. Last but not least, I wanted to talk a bit more about PropNex, which is the largest property agency in Singapore, with a network of over 13,000 property agents. It has a dominant market share in the property transactions in Singapore, representing about 64% of total transaction volumes in 2024. So PropNex is seen as a proxy to the improving new home sales in the Singapore market. So we see here the very sharp increase in PropNex share prices July this year. So this is not Nvidia or Palantir share price. It's actually a mid-cap name in Singapore. We see the share price increasing from close to $1 to about $2.20 per share. So in terms of the breakdown, we see here it is exposed towards the private home sales under project marketing, private resale, as well as rental market in the Singapore property sector. I mentioned earlier, it is the leader in the number of property agents that it has, representing about 13,000, and that represents 49% above its closest competitor. As a result, it has about 64% of the home transactions in Singapore in 2024, representing an increase from 62% in 2023. So we see here improving transaction volumes in the Singapore market starting from the fourth quarter of 2024 with the fall in interest rates, and that momentum has continued into the first quarter of this year. So with that, we see an improvement in PropNex profit as well. Revenue grew 73% in the first half compared to the previous year, and the net profit more than doubled to 45 million from 20 million in the first half of 2024. So with that, I have shared three names in the Singapore market. All of them have some specific drivers. and leading to improve in profitability for the companies in the first half of this year, and also renewed interest amongst investors, especially with the various measures that are being introduced to boost the Singapore market. Okay, so with that, I'll end my sharing on Singapore stocks and I'll hand over to the next speaker. Thank you.
Thanks, Gerald. Hold on, let me share my screen. Right. So, morning everyone. Welcome to Mankapa again. I'm here. Right. So, looking at the S&P 500, well, it retraced modestly yesterday, closing down approximately around 0.4% as the market paused after last week's rally sparked by the Powell's dovish tone at the Jackson Hole. I think, however, sentiment remains optimistic with focus now shifts on the Nvidia's upcoming results, which could, I think, give spark to the market. Also, investors are now shifting out of the overbought tech sector as the market waiting for, for any clarity, right? So, if Nvidia delivers strong results, I think this could reignite the momentum, as we all know that Nvidia is also the Mac 7, right? So um, I think if for the Nvidia, I think if the uh, momentum bullish could be further on the upside, I think possibly breach above our 6,500 resistance level for the S&P 500. Well, for now, I'm still looking positive on the US market. Right. So looking at our US trading stocks that we have published overnight, we issued Uber Technologies, Uber, stock code Uber. So I think this one is the transportation company. So the stock has breached above the 95 US dollar level. If the bullish momentum could persist, we can expect the stock to travel towards the 100 US dollar level on the strong bullish momentum, followed by the next resistance at 105 US dollar level. Now, if they counter reverse and breach below this 90 US dollar level for the immediate support, it could indicate that it is a trend reversal signal. Also, we have General Motor, GM, right? Well, if you see here, the counter went up with a gap after the hammer pattern appear and break out above this immediate resistance at 58 US dollar level. And if the stock climb higher, we could see that it might propel towards the 62 US dollar level, followed by the 66 US dollar level. Now, if the index slide lower below this 54 US dollar level, I think this might signal a possible shift to a bearish structure. Right, so looking at the China A50 index, yesterday it rose during Monday's session, which I think driven by the continued optimism from investors into the equity market, right? So the bullish mood was further supported by the encouraging uh, uh, diplomatic signal easing geopolitical tension, right? On the technical front, I think the index now currently testing 1,500 or 15,000 points level, riding on its uptrend momentum. Also, solid PMI data also help the bullish momentum upwards, confirming the confidence on the economic recovery. Right. So, looking at the WTI price futures, right? So it went up steadily on a rounding bottom formation. So I think if you are familiar with the technical analysis words, we call this as rounding bottom because it's a technically it's a reversal pattern, right? So for the past few days or session, the tension between Ukraine and Russia never been resolved even after the meeting, right? And now, after Russia's nuclear plant been attacked by drone, they accuse Ukraine for the attack, and now this has sparked the ongoing concern on the supply issue and give positive sentiment to the oil price. I think, however, the technical view, uh, the price is still trending above this 20-day moving average. So we still keep our uh, bearish trading bias change for now until it cross above this uh, second resistance, right? So coming back to Malaysia, looking at the FKLI. So I think good news on the local market. FKLI rallied to 1609 points, lifted by the optimism across Asian uh, market and renewed expectation on the US rate cut. And also I think the local market saw positive buying across blue chips and also mid caps, suggesting that the confidence from the investors. Okay, so I think we expect for this FKLI to continue to uh, be in positive territory, tracking on the uh, VMKLCI as well. Um, so until fresh trigger, I mean fresh triggers emerge, sentiment at the moment remain upbeat, right? So keep an eye on the next resistance at 1620 points with support. I think at this juncture, hovering near the 1535 points, we still hold our positive trading bias unchanged, right? So yesterday, I think tech sector surged by 3.19%, triggered by the optimism around the US rate cuts, uh, by the global rally in the tech heavyweight last session. So locally, I think investors are now piling into the tech and solar plays amid renewed interest in these green energy policies, right? So also there's this upcoming solar IPO launch prospectus by end of this week. I think if I'm not mistaken, it's JS Solar, right? So maybe something that you can take a look and monitor closely for today, or even consider adding it to your watch list, right? Maybe can take a look at Cyber. Then we have Power and Energy, EG, IT Max, Opstar as well, and some other names that we highlighted. Yeah. Right. So moving on to our trading stocks. So today we have issued three red. Okay. So the stock has experienced a breakout formation above this 35-cent level. With that, we expect that the momentum to remain bullish and the stock able to climb higher to test the next resistance at 38-cent level, followed by 41-cent level. So if the counter break below this 32-cent level and form a new low, I think this could indicate a near-term pullback. Right. So next, we have Unisem. Unisem. All right. So also, I think the stock on yesterday's session has experienced a breakout above the resistance at 265 cent on the accelerated volume, if you can see here. So I think should the bullish momentum hold and continue to trend higher in the coming session, the stock on the counter are potentially climbing higher towards the 280 cent, followed by 290 cent level. So if it drop below 255 cent level, I think this would open the door for a correction phase, right? So look at the FCPO features. So it dipped on yesterday's session. I think approximately to close at 450, right? So down by almost 0.8%, if I'm not mistaken, yesterday. Um, right. So the pullback, I think, seems quite tight with tied to the weaker soybean oil prices, which I think typically drag the palm oil as well, right? So also a stronger ringgit yesterday made the palm oil more expensive for buyers, and if I'm not mistaken, um, now the USD oil are somewhere around 4.25, 4.2 ringgit. So I think this one is reducing the demand pressure, right? So sentiment is I think neutral to cautious given this mixed signal. However, I think for now support still remains at for 350 ringgit, and we still have positive trading bias. All right, so that's all from me for today, and I pass the floor to Adam, and happy trading, everyone.
All right. Good morning, everyone. So today we have a company update on Gamuda. So yesterday, firstly, Gamuda is now collaborating with Gentari to develop up to 1.5 gigawatt of solar, photovoltaic or PV assets, along with battery energy storage systems. And this is a good addition to Gamuda's venture into the renewable energy space. And given the latest collaboration with Gentari, we estimate Gamuda, will likely have about around 4 gigawatts worth of renewable energy assets under their belt, which could, provide recurring income revenue in the long term. So separately also, Gamuda announced that it secured via a JV with Rahim Holdings a 1.1 billion contract for the Northern Coastal Highway project in Sarawak. And this project is going to take 48 months to be completed from the date of the site possession. Gamuda is no stranger to Sarawak, given that it has also, with the same JV, completed projects such as the Pan Borneo Highway Sarawak, which we think was completed sometime in 2024. So there will be manageable execution risk from there. So year to date order book wins. The latest balance of order book for Gamuda is about 37.7 billion, and that is close to its 40 to 45 billion target by the end of calendar year 2025. No changes to our earnings estimates, as the latest job win is within our FY26 replenishment assumption of 21 billion ringgit. So, maintain buy with an achieved target price of 652 cents. Yeah, so that's all from me, everyone. I'll pass on the floor to Yujie. On to you, Yujie.
Okay, morning everyone. This is Aeon first half result note. We are downgrading the stock to neutral with a new target price of 4.46 ringgit. Aeon first half result missed expectation on soft sales and margin. Year-on-year first half revenue rose 3%, driven by the property management segment on improved occupancy rates and solid rental renewals, while retailing segment was flattish due to soft consumer sentiment. First half EBIT margin slipped 0.6 percentage point due to higher OpEx from expansion and a less favorable product mix. Q-on-Q, second quarter sales fell 20% as festive spending had already been captured in first quarter, and consequently, second quarter core profit dropped 82% Q-on-Q to 12.3 million ringgit. So in terms of outlook, we see downside risk to management high single-digit rental reversion guidance, as the SST expansion on rental may limit landlords' ability to raise rent. And nonetheless, management's focus on ongoing renovation work should enhance competitiveness and attract more tenants. While expansion projects at KL Midtown and Aeon Seremban remain on track for FY 26 to 27, with each adding about 400k square feet to the net lettable area. For the retail segment, we expect subdued consumer sentiment to continue to weigh on sales, while OpEx is set to rise from the SST expansion on rental. That said, continued government cash handouts and lower interest rate environment should provide some relief on consumer spending. Post-result, we trim our FY 25 to 27 earnings by 14% on lower rental reversion assumption for the property management segment, as well as reduced margin assumption for both property management and retailing due to higher OpEx. Our DCF target price is revised to 146 cents. We downgrade the stock to neutral. That's all from me. Thank you, everyone, and see you guys again tomorrow.